Up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I got the guys waiting. Listen, let's do a little house cleaning for 30 seconds. Number one, hit that like. Number two, subscribe. And if if you haven't hit that notification bell, hit that too. Now, listen, I got my guest here. Don't nobody embarrass me like Keenan says. I'm gonna take this notebook and I'm gonna go bap, bap, bap. Listen, you guys know that all of us have people that love us too, okay? Anybody with negative comments, you're getting blocked. Anybody new that's just the gamblers, I'm just telling you guys, I just want you to behave and we are going to help you make money. The thing that I love about you guys and the thing that I love about the Stock Squad, the thing that I love about the Patreon is positivity, positivity, positivity. We live good. We treat people with respect, okay? That's what we're gonna do. I know there's a few knuckleheads that are new, all right? But without further to-do, listen, we're gonna shake this one up and keep this one moving. There may be some people that get cut off, but we simply want to do a machine gun and hit you guys with a lot of plays in a small amount of time. All right, Mom. Look at my man. He says, "Tell him, Monk. Look at that pink hat. Only a player can play it like that." Hey, you guys, say hello to the Stock Squad. Mo, I tell you what, we gonna start with you. Go ahead and greet the people.
I appreciate you allowing me on your channel, Larry. I always love having the crew together. We had a fire live stream today in the Discord over at the Stock Squad. Man, I just can't wait to continue this conversation and see what stocks we're all looking at.
That is great. That is great. Josh, come on down.
Hey, Larry, thank you for having me on today. I know that we are going to have a good show today. Nvidia has done the heavy lifting, and I know that it's going to be an awesome reaction video. I'm looking forward to what everyone has to say. Shout out to everyone. Emma, Ty Williams. Appreciate you guys being here.
That is cool. Keenan, come on down, Keenan.
What's going on, everybody? We're looking to make some money today. Shout out to the Stock Squad. Larry, thanks for having me on. And if you're in the chat, let us know where you at. Rep your state, rep your city, rep your area, so we can see where the family is.
Hey, that's all good. That's all good. Listen, guys, right at the top, this is what's happening. Today is brought to you by the Stock Squad. Who? The Stock Squad, where you can come in and get the best from Mo, myself, Stocks with Josh, and Keenan Grace. On this video, it's going to be the top link below, the very top link below. Come and join us and listen. If you don't make money in the Stock Squad, I don't know what's wrong with you, all right? Listen, we gonna be talking about Nvidia. Look at this, good people, up over 1,000%, 1,000%. Josh, go ahead and hit us with the bop, bop, bop. Let's go.
Well, I'm going to tell you guys that my target for Nvidia, as far as sort of a max move on earnings, is 1050. Kind of, you could call it safe and be 1049. Now, if you told me that we were going to get mostly there tonight, I wouldn't have believed you. But we've got up to around the $1,022 level. And I would just say that, you got to understand that this has been a massive move. When I give an area of resistance, it doesn't mean that that's the highest it'll ever go. Because I tell you, and Larry, we're not going to get into it today, but if you go back in the day and you look at a decade of Apple coming up, right? Coming up out of its lows into its big run-up phase, then it had its stock split, right? And then it had another stock split. And I think Nvidia is going to follow that course. And so I think that this move getting to 1050 for me is confirmation of that coming stock split, stock split. So I don't know. I mean, I think that we could open and touch my 1049 tomorrow. That's possible, but I think this has really pushed to the height of where it's going to go right now. And then I think we're going to have some consolidation and some digestion. It's not to say this is as high as it will go, but it's definitely run up. You guys got to remember, this has already come up quite a bit in the last couple of weeks.
Mo, I'm going to go right back to you. What you got to say about Nvidia, man? Over $1,000.
Yeah, you can pull it up. I mean, I got it on my chart right here. We were looking at this. The signal came through 843, right in here, 877. That happened back on April 29th using my strategy. Since that price of 876, 879, we are now over 1,000. So the technicals are there. It was very bullish going into this. RSI was at 60 before today. It was just a moneymaker. So hopefully a lot of people made cash on this, and we'll see where it goes moving forward. But last time we got a really nice, I think it was up, sales up over 200%. Like, this is just a company that could sell everything they're making. So until that changes, until another dog comes on the porch and tries to push it off, man, I just can't see this thing slowing down, man. It's like, yeah, exactly, man. Maybe some of the little dogs out there have a chance to make a few bucks with them. Definitely keep your eye on those as well, because there are going to be competitors stealing some market share. I just don't think we're there yet. In other words, I'm pro Nvidia.
Talking about dogs, we're going to have the big dog come to the table, and that's my man, Keenan Grace. Keenan, listen, let me get you up here. Let me do something a little different with Keenan, all right? Hold on, Keenan. Let me set the stage for you, okay? Hold on.
All right, let's get it.
Let's see if I can do this right. Can y'all hear that?
Oh!
Wait a minute, listen.
Preparation.
Hold on, listen again.
Look at my mixtape.
Listen.
Proper preparation prevents poor performance.
Proper preparation prevents poor performance. One more time.
Hey. Proper preparation prevents poor performance.
All right, go ahead, man. We're going to cut this down.
You win. We can't let him go now. That should be a #1 hit right now. That was absolute
Yo,
fire.
that made my day. Larry, that made my day, man.
Oh, my God. That's so
Yo,
good.
Baby, put a heart in the
good.
chat. Put a heart in the chat for that.
You got to put 5 hearts in the chat for all 5 P's, man. Let's go.
Right. Put 5 hearts in the chat.
Yeah, 5 hearts in the chat.
Listen, if I wasn't so brown, I'd be blushing right now.
Oh my God, you're killing me.
You're doing something when a black man turns red.
Man, so back to this Nvidia stuff, man. Family, everybody who's listening to this, Nvidia is over $1,000 right now, but understand me on this. They have made a move for the retail investor to be able to take another step into the stock options of Nvidia. Because remember, when you get into an option and you look at Nvidia being a $900, $800, $1,000 stock, the options were extremely expensive. But when you look at them now, after a stock split, which is scheduled for about June 6th, they're going to be, 1 share is going to turn into 10 shares. So if you had $1,000, you're going to have 10 shares that say $100 each or so, depending on the price. But the options are going to be significantly cheaper, which is going to draw in the retail investor. So now, most people on Wall Street, everybody on Wall Street really, and a lot of retail investors know that a stock split is only really something that's done just to make it just look a little different. Since we have fractional shares, you could have technically bought $100 worth, but retail investors often get drawn to stocks that have lower stock price. They might even have missed out on Nvidia totally because they saw it up at 900, right? And there was an instance where Nvidia was about 160 and I had bought some there. Nvidia was 200 and I didn't buy it again. It was 300. I didn't buy it again. It was 400. I started buying again. People are like, oh, Keenan, it already ran up from 160 to 400. The run is done. And I'm thinking to myself, if I listen to you, the naysayer, I'm never going to get paid. You understand what I'm saying? I understand the fundamentals of Nvidia. And I had seen a few people on Twitter, and make sure you watch what kind of sources and trusted voices that you're listening to. I seen so many people on Twitter talking about how Nvidia was overvalued. But then I go and look at the fundamentals of Nvidia, and they're actually making as much money as they should be making. which makes it make a lot of sense. And as long as the AI demand stays where it is, then a $1,000 Nvidia share, it makes sense. It makes total sense. But we'll get into that a little bit later, and I'll talk to you more about it. But before I finish, I want to say this, and I got it. I'm at the where my notepad at, my giant notepad. So I gotta
Take it out. Take it
break
out.
some of you in your head. Listen, you've been holding on to that $160 one freaking Nvidia share average that you had, that $200 average that you had, and you didn't buy no more at 400. You didn't buy any more at 500 because you had that $100 average, that $200 average. Now think about this: if you got one share of Nvidia at $100, and then it goes all the way up to $900, okay, now you got $900. But what if you would have bought some more? Then you would have went up even more than the $900, but you so committed to having that low average that you have that you were actually holding yourself back. And to be honest with you, you got to grow up and get up out of that. When a company can still grow, you still buy. Think about Apple in the 80s when it IPO'd. Compared to today's price, the average might have been like 5 cents a share when it came out. So when it turned into $1, you didn't want to buy it anymore because you're already up hundreds of percent, and now it's $190. So you got to think to yourself, am I DCAing in? Am I averaging in to build up my ownership of this company because it's a great company? Or am I so married to this $200 average that I have that I won't allow myself to make any more money? But we'll get back to that.
I love the fact that you brought that up, Keenan, because some people get married to their average, right? And I used to make that. You used to make that mistake. We all made that mistake, good people. That's one of the things that happen when you're a new investor, right? You got a nice round number. I'm up 50%. I'm up 100%. I don't want to mess that up by buying more. Well, I'll tell you, we all have learned that that was a mistake, okay? I made my first investment in 92, all right? Yeah, I know I don't look that old. Thank you. But check this out, good people. I showed this earlier, okay? Look at this, all right? Now, this portfolio is my $5 a day portfolio, but it's not all of the positions that I have. And I just want to share it with you guys. Before the run up, you could see what my Nvidia is. It's up, as you can see, 100 and whatever this is. I got to look real close myself. My Nvidia was up 153%. Okay. Now, somebody that really is not wise in investing will look, oh yeah, but you lost money on Disney, 7%. Look at the bottom. The overall portfolio was up 30%. Again, it is better to have invested than not invested at all. So what Keenan is telling you is to continue to DCA if it has more room to come up. As a matter of fact, let me show you this. Josh, I want you to get ready to talk about GME and AMC, okay, while I do this, Josh, if you don't mind. All right?
Absolutely.
Because I want the people to get fed today. But I want to show you guys, what did I want to show you? Not that. I wanted to show you, nope, not that. I'll pull it up. Mo, what you got to talk about until Josh gets ready?
Well, I can talk about it, Larry. I was waiting.
Yeah, go ahead.
Okay, I'm sorry. Let's go right into it. Josh, go ahead. It's coming to you. Go ahead.
Okay, so I just want to keep my thoughts on AMC, GME very, very simple for you guys. We do not have a breakout signal for any of the meme stocks right now. Matter of fact, we've got concerning indicators. What's a concerning indicator? Well, there's structure all along the way. And what we're doing is we're consistently dropping beneath structure and back testing it, and it's confirming as resistance. And so it's one of the reasons. Now, does that mean the move is over? No, we have no idea whether the move is over, because what's going to happen with these particular companies is because of their fundamentals, you're going to see a bunch of people pile in and short it, and that's what could trigger another wave. And so if you are going with that logic, the very minute that everybody believes that the pump is over, that's most likely the moment in which it could pump again. Having said that, we have yet to not lose a structure, one after the other. And so $17.50 is a potential comeback price for GME. $3.50 is a potential comeback price for AMC. And so you need to protect your capital. You know, when I talked about these and when Larry's talked about them and when the guys have talked about them, they've talked about using a stop loss. The only way to make money on these is once they confirm bullish and they squeeze, you got to get in and you hold it throughout the day. You cut it loose at the end of the day or the following morning. These are retail is a buy and hold community, and the meme stocks are so fast moving because they're not investments. They're not like Nvidia that you can hold them for years and they keep going up, right? Because they're in an upswing. Wall Street confirmed, Larry, that you know, these guys came out 3 times revenue and higher forward guidance, confirming the staying power of AI going in, you know, to the end of this year and into 2025. Personally, I don't even believe that I don't believe we're in an AI bubble yet. I think AI is just beginning. Sure, there's some overvalued AI companies, but I don't think we've even begun to see how AI is going to affect companies like Apple. I don't think their AI story's out yet. You know, Tesla is building. I don't think that story is out yet. I think they've actually been marrying AI to some of the technology they've been working on for a long time. The AI learning, you know, with their self-driving cars. So we know Nvidia is 100% right. They're going to have customers up the wazoo for months and quarters and years ahead. And this was a huge milestone, getting to where they got market share, but it's not the end because this is really just the beginning.
Keenan, no one has covered AMC and GME as long as you have. You are the AMC and GME expert of this group. Listen, what you got to tell the people? You guys, let me know how my mic sounds now, please. Thank you.
So everybody listening about GameStop and AMC, understand this. If you put money towards protesting market fairness, I totally understand that. I would encourage you not to put money towards it that you are not willing to lose, because that's what a part of the protest is. I have allocated profit towards AMC to protest market fairness. I have allocated profit towards GameStop that I won from call options and put it in there because I'll be willing to lose that. Not a dollar more, not a dollar less. Only what I'm willing to lose, because then and only then will I be comfortable with the fluctuations. I don't anticipate that something new was going to happen that we aren't or we didn't already learn. But I do know one thing after seeing this new pump up. There are going to be people who get into the market. There was an older guy who I was talking to about maybe 2 weeks ago, maybe even a week ago, right? When the GameStop stuff first started going off, when Roy and Katie first started posting. And he was saying, yeah, you know, I'm getting in on this Jimmy, right? Jimmy. I'm like, what's Jimmy? What's Jimmy? He's talking about GME, GameStop. And he put $6,000 into Jimmy. And I'm thinking he doesn't even know what GME is, let alone what a stop loss is, let alone what risk management is. So then I said, oh, show me what that is, right? He shows me, it's GameStop. I'm like, oh, you know, I didn't want to make him feel like he was ignorant or anything. So I say, oh, you mean GME, GameStop. And he's like, oh, yeah, isn't that store? I'm like, oh, he don't even know what it is, right? So then I'm thinking to myself, okay, man, what is your exit plan? Yeah, they're saying that it's going to go up. They're saying that it's going to go up. And I just thinking to myself, dude, like in my mind, you know what I was thinking. Mm-hmm. But I was like,
that's a big one.
That's listen, this is the one that give you a concussion. Bow, right? So I'm thinking to myself, this dude is gonna lose this $6,000, and knowing that he put all his money into Jimmy, his money is about to go to zero because he's never gonna pay attention to it. He's not gonna know how to trade. And I want you to really think about who you are in the market with. You're in the market with Josh. Stocks with Josh is trading GameStop. So is the guy who bought Jimmy. He's trading it. Out of those two, who do you think is gonna come out on top?
Right.
Do you understand what I'm saying? So if Josh is getting money out of the market, he won a trade. On the other end of that, somebody lost a trade. So then I could assume it's the more uneducated one who's investing in the Jimmy and not G. He doesn't even know what he's doing. So I say all of that to say, if you are protesting the market fairness, make sure that you're not putting your life savings in the Jimmy. Make sure that you understand what you're doing. And if you are trading it, have a clear plan. If you ever enter into a trade, that you do not know your way out of, then the way out of it is not going to be what you want. It's really not. You're going to lose a lot of money. So personally, I hold AMC and GameStop, but only a small amount of it that I'm willing to lose. And then I trade it. And I've been killing it with the call options on AMC and GameStop. But guess why? Just like what Josh was saying earlier, people get into these plays with no plan. So it's like taking candy from a baby, really, where I'm like, man, why is it so easy to make all this money? Because so many other people are making poor decisions and I'm making a rational one. So I don't know if you guys can hear this sound bite. I'm going to like play it. You tell me if you hear it. Can you hear that?
No,
Not yet. No.
You can't hear it. Okay, yeah. So you can't hear it. So it's the Transformer sound. Have you ever watched the Transformer movies? And then the robots, they change and it's like, right?
Oh, yeah.
Autobots roll out.
Right,
so we
right.
had a joke on my live stream, and it was how it's how traders are transformed into long-term investors because they didn't have an exit plan. And I don't want you to transform from a trader into a long-term investor because you don't have a long-term investment plan, family. So that's what I got for you. Just make sure you understand what you're doing.
Hey, listen, we're going to talk about crypto for a minute, but after we finish with crypto, we're going to hit you guys with some stuff that you need to know to make some long-term money, okay? Please stick around. We're not going to be long with this one. We're going to be under an hour. Mr. Mo, I'm the reporter. Mr. Mo, do you think that they are going to pass a ETH ETF, spot ETF? And if so, why, sir?
Well, because they did everything except telegraphed it. And here, you only have to see this little number right here. I know you guys can't see my whole chart, but that little number right there, 42% up for the Grayscale Ethereum Trust. That is the money we were able to make in the squad when I brought this to you back in the beginning of April. And of course, how much is Ethereum up since then? Only 16%. So we brought the family an extra 26% on this play by announcing that you can get more if that approval comes. You had who was it? It was Bloomberg. The Bloomberg guys started this. Now you have Barron's reporting and you have the UK now allowing spot ETFs as well announced today. Everybody, Hong Kong, US, UK, who else is going to be next? So yeah, it's not if, but when. And so even if it's like hopefully this week, but even if it's not this week, it'll happen in the next few weeks. The only thing I was upset about to stake it. And I think that's going to be a whole different, lawsuits down the road and everything else. But the good news is the fact that spot ETFs are here is a major win for Ethereum. And you guys know I've been in Ethereum for years and years and years. And the goal will be to continue, I should say, to become a crypto millionaire, basically using Ethereum. So we'll see if that can happen.
All right. Let me get this microphone check going. Microphone check. Someone said it was too loud. Someone said it's not loud enough. I'm just trying to. You guys.
Larry, I think it's a bit over now.
Okay, so now it's too loud now.
Yeah, I think it's a bit too loud.
It's not loud. It's like distorted.
Okay, how about now? How about
too much
now?
gain?
It went slow. Go back up a hair.
Oh, we're back up ahead.
And then,
how about now?
Can I throw
How about now?
That's better.
Is that
Keep
good?
going.
Because everybody's kept commenting. Let's just take a minute.
I wouldn't adjust more. That's good.
Okay. All right. So, Josh, what you got to say, man?
Well, okay, I got a question for you, man. Are you familiar with the Black Phoenix?
Talk about it.
Well, let me tell you, we all need to be aware of the Black
Josh,
Phoenix.
Hey, Josh, I used to date a girl, but anyway, go ahead.
I was setting you up for whatever humor you wanted to throw on the table. But all joking aside, there's a crypto called BPX. And in the last 24 hours, guys, I want you guys each to take a random guess of how high of a percentage it's jumped. And I'll just say, be a little ridiculous. So in the last 24 hours, BPX, Black Phoenix, has made a move. How high of a percentage in the last just 24 hours has it jumped? What's your guess, Larry?
300%.
All right, Mo, what's your guess?
If it's an altcoin I never heard of, I'll go 5,000%.
Keenan, what's your guess?
So just so I can win the prices right, I'm gonna one up Mo and say 5,001.
5,001. That's
Okay.
my man right there.
So
That's it.
Keenan
He's
is
getting on
going to
stage, and I'm going to be watching.
Keenan's going to win with that additional percent, but I'm not making this up. This has gone up 4 million %.
What?
Wow.
There it is.
Yes.
You win,
Mind
Keenan,
blowing.
and it's a new car.
So the token has basically gone from multiple zeros to $2.60 from on May 22nd. It went up 4.4 million % in 24 hours. The unexpected victory has caught the attention of investors, prompting them to examine the protocol's underlying principles and look at it more carefully. So Black Phoenix has presented a fully on-chain liquidity protocol for instant cryptocurrency token swaps in a decentralized manner on any smart contract enabled blockchain. Now, I can't.
So Josh, I got a question.
Yeah.
What I don't know if you would know though off the top of your head, but the market cap. This is a good time to speak on that because if it can move up 4 million %, the market cap must have been nothing.
Yeah, it had to have been a small market cap. And I'll be
Very
honest,
small.
when I see a move like that, it's either retail frenzy or it's goes back to the days of FTX where money was used, even fake volume was used. And so I really can't speak to what drove this up 4.4 million. But on a day when Nvidia is reached over $1,000, we're still dead center to the crypto bull run. And there are projects out there that exist, and I don't have any Black Phoenix. There's projects out there that exist that are going up 4 million %. It's another reason why I pay attention to Wall Street. Wall Street includes crypto at this point because they've sucked it into themselves. And, the opportunity, and I say this, so someone says, well, I missed Nvidia. Okay, well, I missed the Bitcoin run up, or I missed Mo's Ethereum prediction. I wasn't catching it. I wasn't on his page. I wasn't watching all the videos. Guys, Wall Street, I tell you this all the time. You're in a train station and every minute a new train comes 24 hours a day, 7 days a week, 365 days a year. And that's literally what you've got the four of us doing in the Stock Squad is pointing out opportunities. Another one was the partnership with IAOZ with Nvidia today. And that hasn't even really moved yet, but it's another crypto project that's going to be working within their protocol to do DPIN, which is the world of, it's your world, it's your internet world. It's essentially all of the technologies that you're connected to, that are connected to your life, that are smart. It's a smart fridge, a smartphone, a smart car, it's a smart thermostat. That's become your internet, your world of connection to the outside world. And here is another crypto project aligning with Nvidia. Nvidia guys, they're doing the heavy lifting. They're pointing you to the cryptos they're going to work with. In the Stock Squad today, I dropped that news article and I dropped a technical and I gave everybody the line in the sand with a stop loss. These are the types of ones you want to be paying attention to. Unfortunately, I didn't bring Black Phoenix to you. I'm just talking about it today because it's a reminder of the opportunity.
Hey, I want to talk about something right quick, Josh. Listen, we're going to talk about, look, and we're going to wrap this up. Listen, if I'm going to give you a bear case and a bull case, if, that's a big fat if the ETF tomorrow does not get approved or if it gets approved, okay? And then you guys could chime in. This is going to be a lightning round. We're going to wrap this segment up, everybody, in 5 minutes, okay? So look, this is Ethereum, right? Here's what I think could happen. These are not facts, but this is what I think could happen. If the Ethereum ETF gets postponed, not canceled, but postponed, I believe it'll just cool off to the $3,500 mark, okay? Right now we're at $3,743. But because Bitcoin, I'm just using this as an example, Bitcoin has went up 67% right now after the ETF was approved, okay? So it took from January till now, or whenever that was. Was it November or December, Mo, of last year when they approved the ETF for Bitcoin?
It was January 10th, 2024.
January. Okay. So, all right. So I believe this could happen in 3 months. And that is if this followed the same and went up 67%, meaning Ethereum, and I believe this could happen in months. Ethereum can go up to 6,200 if it follows suit. This is just hypothetically to show you what kind of growth we could have in a short period of time. Now, I know a lot of people have a lot of bullish forecasts for Ethereum. I'm just sharing with you the bull case and the bear case of what I think could happen. Anybody want to chime in on that?
Well, I'll agree with your technicals.
Go ahead.
I'll just throw this out, and I'll leave it for Mo to really speak. But I agree with your technicals that the risk to the downside would be a back test of structure at 35. But actually, for some reason, the chart is just not looking bearish to me. It's a pretty bullish flagpole structure, and I see it getting to 4,100. So somebody must know something. That's how the chart looks to me.
So I got something too. So Mo, you
go
go
ahead,
first.
Keenan,
You go
jump
first,
in
man.
there.
I'll wait.
Go ahead.
Yeah. All right. I was just going to say, just for everybody wondering, I still see a discount on ETHE, the Grayscale Ethereum Trust. It's around, I think, 8 to 10%, but check the new number. So in other words, if this gets approved, you can still get that little bit of 8 to 10% that's still in that discount when it goes to spot ETF and capture that. And now after that, it's going to be tied to Ethereum. Well, where do we go with that? I'm with these guys. I believe short term, if it gets approved this week, I think we go to 4,000 most likely before the end of May. That means by the end of the week, we'll be over 4,000. Where do we go after that? Well, if you look at Bitcoin back in January 10th, after it got approval, it actually dropped for 2 weeks. But then they opened up the ETFs and it went skyrocketing. I don't know if we have an exact replay of that, but that was a sell the news event for a couple of days before, man, it blew up. I do believe that you are going to see Ethereum get above the $5,000 level and even more over the next few months. I'm with Larry on this. I'm actually very, very bullish. You see other countries around the world right now absolutely hammering it and allowing these spot ETFs. It's just going to continue the wildfire. You have the deflationary powers of Ethereum to boot. We are burning those gas fees. People in Shiba Inu and some of these other ones love to, we talk about Dogecoin. I always say, if you can get deflationary pressure on a crypto where you start to go backwards in overall supply, man, it becomes fascinating to see where it could be years down the road. But when you add in governments allowing us to go ahead and have these spot ETFs, man, with the utility behind Ethereum, this is massive. And now it's a competition between countries, not just communities of followers, not the guys wearing hats on YouTube. It's country versus country now. It's crazy. The race for crypto is on. And if you don't see this, you are going to miss this 10 years down the road. It's not a straight trip up. It's going to be up 50%, down 80, up 400%, down 80, up 1,000%, down 80. You just got to be smart about this. But overall, this is nothing but a throughway to being able to make some nice profits in the long term. That's my opinion. Not telling you what to do, but I'm loading the boat.
Thanks, Kiko Stocks. I appreciate your super chat. Look, we appreciate you too. Hey, Keenan, go ahead and take it from there, because I got something to say about crypto also.
I got you. When I answer these questions, I like to have the family show me what they're thinking too. Let me know in the chat which crypto all time has made you the most money. You can put the ticker symbol or you can write exactly the name of it. Let us know in the chat so I can come and I can read it when I'm done talking. Understand this. We are looking at Ethereum and we are seeing the Ethereum.
Uh-oh.
Lost your audio.
Can you hear me? Can you hear me?
Yeah, your audio went out.
Okay, you got me. You got me. Okay.
Gotcha.
So we are looking at the Ethereum ETF potentially happening, right? The spot Ethereum ETF. BlackRock is trying to really have this happen. BlackRock owns most of everything in the world. And what BlackRock wants BlackRock gets. Obviously, there's no guarantees, but they generally make things happen as if allegedly, supposedly, hypothetically, they're pulling some strings in the background, right? Who knows? But it looks kind of funny when you look at it really closely. If Ethereum is allowed to have an ETF, just like Bitcoin, and they're both the two leaders in cryptocurrency, the altcoins are going to follow. They are very likely to lag behind and not have the immediate resurgence that we want. But pay close attention to the altcoins too. Not just Bitcoin, not just even Ethereum. Pay attention to all of the other cryptos. Go to cryptobubbles.com, look that up. Maybe leave that browser open on your laptop. This does not mean YOLO into everything, but this does mean pay attention. One that I've been talking about for a while now, and those who follow me on my channel, you know, is Ondo Finance. And this has been one of the most consistent cryptos that I've ever seen this season. Why? Or this crypto cycle, because it falls down to the 60, 70 cent range, it runs up to 100. It falls down to the 70, 60 cent range and runs up to, or I say $100. So it has been such an easy in and out kind of a trade. Now, with Ethereum having the potential to get an ETF, which can raise the entire crypto market, then we can finally break out from, let's call it 105 on Ondo Finance, ticker symbol ONDO. We can finally potentially break out of that and then see even new highs. But again, it all depends on the overall crypto market. And I want to say this, never let yourself get caught up in any of these movements. I'm talking about the Shiba Inu movement. I'm talking about the Bonk army. I'm talking about the XRP army, the Ondo army, all that. Don't get caught up in none of that. When you do it, what you're going to do is you are going to be transformed from a quick short-term trader into a long-term investor into it, because you're just waiting for it to come down, aka a bag holder. And I don't want that for you. I want you to make money on these and then keep your head on a swivel. Make sure you're paying attention closely and you say, okay, I got in here, I get out here, so we can knock it out of the park.
Yes, listen, I'm going to play a video and I need everyone to listen to this video, okay? Hey, I appreciate this super chat. Hey, I appreciate you. You're a proud member of the Discord. Discord. Ambrose, let us know if you're making money from that Discord. You're a proud member. That means you are. I want everyone to listen to this because we want you guys to be well informed. Please listen. Let's see here. There we go. All right, here we go.
In the last 24 hours on speculation that the ETF is coming. Step back a little bit. What seems to have happened is, Donald Trump 2 weeks ago got on stage and said, I'm the crypto president. And it was on the same day that Joe Biden had threatened to veto a relatively obscure piece of legislation that the SEC had put through, a rule on accounting, saying that crypto assets in custody needed to be held on balance sheet. And that kind of set off a firestorm where it almost became a purity test, like Republican, good for crypto, Democrat, bad for crypto. And I think the Democratic regime woke up and saying, this is crazy, right? There are more crypto owners in America than there are dog owners, right? We have 85 million people that own crypto, and a lot of them are single issue voters. And the Democrats looked like they were the party against dogs. And so you've seen a pretty dramatic change. First of all, you had 9 senators cross the aisle and 21 congressmen on the SAB 21. And so that's passed, the repeal of that, and it'll go to Biden's desk. We'll see if he vetoes it or not. And all of a sudden, out of nowhere, what seems to be a complete about face with the SEC on the ETH ETF. And, listen, I don't have any inside info other than talking to people in the markets, and we'll see. We do have an ETF in registrations. I got to be a little bit careful. But assuming, the market is right, and the market's usually pretty smart, it feels like someone at the Biden White House made a call and said, guys, we can't be the party against crypto anymore.
Now, you guys heard that. I'm telling you guys, this guy just he's telling you what the truth is, because they are all switching. President Biden, you guys saw the clip. It was going on everywhere. Said this. He said, if you like crypto, then I'm your president. He literally, I'm paraphrasing, he literally said that. I'm your crypto president. All right. Now, that's what Trump said. Now, you guys know a while back he said he don't like crypto, but for your vote, he likes crypto. And the same thing with Biden. These guys don't want to be known as the guy that killed crypto now, because they know that that's what the people want. So these are all positive things about cryptocurrency. Mo, talk about it.
Yeah, we discussed this. We had that live stream today in the Discord over at the Stock Squad. We talked about this. Look, you heard what he said. A lot of voters out there, it's a single issue that will push them to vote red or blue. And I know there's millions of people that already made up their mind before they even knew who the candidate was. But for millions of others, it comes down to a single issue. I am huge crypto, and I have a lot of beliefs. But if you had a candidate come out and say, I am going to make sure that Ethereum, Bitcoin, they're approved on spot ETFs. We're going to allow staking for Ethereum. It is not a security. We're going to pass this thing. We're going to get it done. You don't think that's going to sway me? You don't think with what I do, how much money I got invested, everything in my beliefs, that might push me over some of the other things I might not agree with them? And I think I'm not alone in that. I think you heard what he said. More people own crypto than they do dogs in this country. It is not a small side project like back 10, 15 years ago for crypto. This is monstrous now. And so now the world knows, and everybody's starting a race. And I'm telling you, governments are fighting governments to be the leader with crypto. You were seeing it. The UK absolutely hated crypto in 2020. They just okayed spot Ethereum and spot Bitcoin. This is crazy, and I love it. If you're in, people ask me, when's the best time to get in? Yesterday. When's the best time to get in? Now. And so in other words, you play the charts, watch the technicals, watch Josh's channel, watch my channel for technicals, get out there, follow the trends with Larry. You want to know the option plays, you go to Keenan. We have the information to try to help you on this. It's hard to time everything. We don't got the crystal ball like they do down in DC, but we do have a lot of research experience, and I think we're doing really well. I can tell you, a lot of the trends I've done in crypto have made me a fortune, and I think it's going to continue.
There you go. Listen, there's a lot that I wanted to show you guys, like the fact that Grayscale, as you can see, Grayscale Bitcoin Trust sees first inflows since U.S. ETFs were approved, right? Look at this, 63 million in one day. Grayscale now has 17.4 billion in Bitcoin, okay? And so, guys, it's unstoppable. We got Fidelity on board, okay? We got the other investment platform that is in, and BlackRock owns a portion of that. We got to understand what BlackRock wants. Like Keenan said, BlackRock gets, and that's the truth. So I'm going to switch right now. We try to keep this one moving to keep you guys fed. If you haven't hit the like button, I'm going to take a station break right now. If you haven't hit the like button, go ahead and hit the like button. But I also want to tell you guys about this group right here. Let me tell you something. If you don't take the opportunity to get into the Stock Squad, I don't know what to do, because listen, these guys have been killing it. I am so proud of these guys. All of them have been killing it. Mo's been live trading, Keenan and Josh with the technicals. Listen, if you're buying shoes and you're buying Starbucks and you're buying all of this, but you're losing money, the Stock Squad is where you want to be. That's the Patreon, top link below. Listen, I want to talk to you guys now about some best practices, okay? Some of the basics that you guys need to know how to make long-term money. You guys just saw my Nvidia money, all right? That wasn't an option, okay? Though I do options all of the time. That wasn't an option. That is money that I put in automatically every week and have been doing for a little while now, okay? And that's what I want you guys to do. I know a lot of you guys are new here. You're the AMC GME and meme stock only crowd, but I'm telling you, you're welcome here. But we don't want you to just get rich. We want you to be wealthy. Now, Keenan, I want you to talk about some of the things that is going to help the followers to gain generational wealth and not just get rich.
I got you. So everybody who's listening close, understand that you have to understand the fundamentals of companies and what their core business is. When you think about a business model of something like Nike, then you know what they do. And you may have heard that Nike, they have these alleged sweatshops overseas. And, we're not going to get into the politics of that, but they make shoes for 5 cents and then they sell it to you for 500, right? They make it low, they sell it for a lot. You want to see in all companies if it makes sense to buy it at specific prices. So one way to look at a company is to compare the price to earnings ratio, aka the PE ratio. Now, one thing that I want you to think about, even with that, is a little detail: the forward PE, the forward price to earnings, because you want to see what a company projects that they'll be. So think of it like this: when you see an athlete in their, let's use Nvidia as an example. Let's say that Nvidia was a high school athlete basically a year ago, and then someone said, you know what, I'd be willing to buy Nvidia for $160 because that's basically what it was. And then someone else says, yeah, but this thing is going to 1,000, man. This thing is going to the big leagues. This is going to be a top company in the entire world. It's worth way more. You only see the potential of them being in high school right now, but understand, you might be looking at a LeBron James or a Michael Jordan in high school, and then they're going to be in the pros and they're going to be making way more money. So you want to see not only what they're doing now, that's the PE. You want to look at the forward PE for what they're projected. So now when you see these two numbers, the PE, price to earnings, and then the forward PE, you want the forward PE to actually be a lower number, and you want to compare it to the S&P 500. So let's use another example, an easy one. Google. Google is actually changing their business model as we speak, from primarily being, you go to Google, and I want everybody to do this when you get off of the live stream. Go to a Google search bar and ask it how to store bread. In the past, what Google would do is it would send you to all of these different websites that pay to get top billing in the search. But now Google is starting to actually answer the question with AI, with artificial intelligence. How is this changing their business model? Because in order for them to decide that they would answer the question, they have let go of the first person who would have paid to answer the question. So now we want to see, are they going to draw in a lot of money from AI? Or are they going to lose money because they're not getting that advertiser's dollars? And how do you understand where this might be able to go? You look at the PE ratio. If the current one is, let's call it 50, and then the future one is 25, okay, they expect to make a lot of money off of this. But if you see that the current PE is 50 and the future one is 100, oh, no. This is going in the wrong direction, and they don't anticipate to make money, at least in the next coming quarter. So pay attention to the price to earnings ratio. It tells you whether or not a company is expensive or actually quite affordable.
Man, I feel like that cartoon. Excellent, Smithers. Excellent. That was absolutely excellent. These are the things you guys need to know, because a lot of you guys, I want you to put, is there a cross emoji? This is a come to Jesus meeting. If you've been trading and you've been doing options, right, but you've been losing money, we're not here to shame you. We're here to help you. I want you to put a cross up, because this is a come to Jesus meeting. All right, Josh, what are some of the good practices that people can participate in that you have learned? You've spent the money, you've lost the money, but you don't want them to lose the money. You want to save them. What is some of the good things that you could let them know about, please?
Larry, I 100% got you. And if people take the time to put these things down on paper and post them, and they process every single trade through the 4 ideas that I'm getting ready to give you, it will transform them. If they're losing money, this is a path to making money. Okay, number 1, trade the trend, right? You hear that all the time, but a lot of people don't know really what it means. And I'm just going to give you a practical application. We have been in an uptrend. Okay, the markets have not been going down. Now, I'm going to tell you personally that we are nearing the end of what I'm going to refer to as the big tech bubble. Guys, I've talked about it earlier in our Discord live, that the market is sort of like 2 guys playing ping pong, and it gets hit from one side of the table to the other. We have been moving up for the last, we'll call it year and a half, really 2003 and 2004. We have been moving up, and at some point, the market The macro is going to pop that ball to the other side of the table, and we're going to test all of the lows. So why do I mention that? Because it's my first rule of thumb. You've got to trade the trend. You've got to understand where you're at. All four of us have had people telling us for the last 6 months, I'm loading up on the SQQQ. Each and every time I've told them, don't do it, don't do it, don't do it. The trend is going up. So I'm both telling you that the number one rule is to trade the trend. I'm letting you know that the trend is currently pointing up, but I'm also letting you know that we're going to have a shift and a change. You always know a shift and change in the market when price action moves from a tight price range to a wide price range. It's signaling that there's going to be a reversal because things are getting a little crazy. Number two, you have to use a stop loss. Everybody tells me, so many people tell me they don't use a stop loss. All the meme stock people that got wrecked back in 2021 didn't use a stop loss. There's no capital preservation whatsoever. You have to learn how to use the stop loss, and you learn how to use the stop loss by understanding the trend, putting some trend lines into your strategy, and putting that stop loss right beneath or right above, depending on which direction you're taking the stock. You've got to use a stop loss. Now, I will excuse some of you for not using the stop loss at this point in your journey because you don't even know where to put it, when to put it. You need to learn. And so I'm giving you, out of the 4 disciplines, I'm giving you a secondary strategy for capital preservation, and that's controlling your position size. So look, I want you to use that stop loss, but if for some crazy reason you just won't do it, the next thing is to understand how to control your position size. Keenan talked about an absolute killer lotto trade on Nvidia that he's excited, like everybody else who's in a lotto trade on Nvidia. He's excited to see what are my gains tomorrow. I'm thinking I put in $900. I'm thinking I'm getting 2K out of this, right? $900 is not 1% or even 1% of 1% of the money that Keenan has. But you see that he's using the discipline of controlling his position size. Yes. And then the last one, and to be honest with you, this is a very serious one. It's over trading. Some of you guys are working at Amazon, as dispatchers, and you can't be watching you're trading on your phone, which is not a problem, but it does have limitations, and you're over trading. You're acting as if you can give it 100% of your attention, but you can't. And so you've got to be careful that you don't over trade, which means you got to look at the longer time frames. If you guys do those 4 things, trade the trend, use a stop, control position size, and don't over trade, you marry that with a little bit of knowledge of them charts, and I think it's the path to making money on Wall Street.
Now, Mo, before I hit you, I need to say this because and it's Rebecca. Listen, you are right when I made the thing about the say about Starbucks, okay? And she said this, and it's so true. People are loyal to their Starbucks. Listen, this is a fact, and all of these gentlemen will agree. If you took the price of a Starbucks cup of coffee every single day and blindly invested it into the S&P 500, from the time you graduate and start your job to the time you retire, you will have between 1.2 and 1.4 million dollars. So it's just brainless to invest in the S&P. It just literally every day. And so that's what's important about building true generational wealth, not just over trading. I'm going to go to Mo, but when I go to Mo, Josh, remember that exercise when you guys came, when I premiered that movie, that exercise that you gave? I want you and Keenan to go over that again, okay? I want you to get that ready because that is so helpful for people with their trading. It's going to save you guys millions of dollars. Mo, what has cost you money? And because you have already lost the money, me well over $160,000 I've lost. I don't want you guys to lose it. That's why we do this. Mo, how can you help people not lose money and make money?
Well, look, at the end of the day, I think I go back to when I first became a financial advisor for American Express Financial Advisors, way back during the dot-com era. I had an old timer who was one of the guys training me, and he was probably one of the smartest guys I ever met in the finance industry. He came up to me, and I thought I knew everything, Larry. I started trading in 1992 as well, Larry. We're two young guys that traded the same exact year for the first time. I know we talked about that before. But the guy came up to me and he said, listen, he was probably in his 60s back then. I was a young man. We'll just say really young. But with that being said, he said, here's a piece of advice for you. Every stock you invest in, you're going to think it's the next coming of everything, that you're going to go, 500% on your money, everything. You can't go wrong because you're so smart. He goes, well, I'm here to tell you after 4 decades in the industry, you're not. And so you're going to have losers. He said, here's a piece of advice I would give you. And I think this is perfect advice for all our viewers. And take it with a grain of salt, but I do believe it's fine advice. Set an 8% stop loss on every single stock. Now, I changed that because some are growth stocks, are going to move a little bit more, a little bit higher spread. But at the end of the day, come up with a number you're comfortable with certain kind of assets. Value play, 8% is fine. Maybe a growth stock, 10% stop loss. Penny stocks, maybe you go 15 and 20%. But at the end of the day, if you go with that stop loss from your purchase price, 8%, I like 8% for everything. If you really just want to make it simple, you don't get married to it. And that's one of the things that took me a few hits to get learned to. I don't need to be married to any play, including Ethereum. And so I broke that, and I've been continuing to break that mindset that, hey, this play is going to be good no matter what, long term. Long term is the two words people use to kind of okay a play that's not doing what they thought it would. Long term. What are you doing? Long term buying. Long term. And the truth is, if you just set that 8% stop loss, the guy says you're going to have thousands of plays you're right on. You're probably going to have a few hundred you're not right on. Don't worry about the hundreds. Make the thousands. Well, I'll turn it to money. We're going to have a few grand that we lose. Let's worry about the hundreds of grand that we can make. And so my advice to everyone is do not get married to it. Set a stop loss. You can do trailing stop losses as it goes higher if you so desire, but a regular stop loss from the moment you buy it, that if it ever drops a certain period, you're out. You take a tax loss, you get a break on your taxes. We can write off up to $3,000 worth of losses overall, net losses over gains every year. And anything we get above that, we carry to the next year. You can write it off, or it offsets gains you get down the road. In other words, let's use the tax system to our advantage. Let's set these stop losses to stop the bleeding, and let's find the winners and dominate it.
Good stuff, Mo. Good stuff. Josh and Keenan, I want you guys to get ready. I'm going to have you guys say something, and then I'll have closing words. I want to show people this too, because we're really helping the people. Look at this, good people. Listen, I want you guys to start getting your cash accounts ready. Now, what I mean by that is it's okay to continue to DCA dollar cost average, but I also want you to get a cash account ready. Why? When the market does cool off, right? Remember, this was COVID. I can tell you right now that if you just put money in the S&P during COVID, just the S&P, without looking with the ups and downs, you would be up 130%. Listen, if you did a stock like Nvidia, this is what I mean about being ready. And you went and just put $5,000 right into it. Where was that? 2020. Okay. There we go. 2020. Okay. Let's just hypothetically, that's 937%. Okay. But just the S&P, good people, if when everyone else was running, you were brave enough to just put your money into some blue chip companies or the S&P overall stock market or the S&P 500, that's a no-brainer, okay? And so I said that to answer what Kathy is saying. Kathy, I'm going to put yours up. Thank you for the super chat, Kathy. Listen, you guys listen to this, what Kathy said. Let me put myself back in there. Kathy said in the super chat, you guys could see that for yourself. She started, thank you. She started, listen, for those of you that don't have a Roth IRA, you could put your money into the S&P 500 and then at some point at 59.5, and you must hold that money in there for a minimum of 5 years, you could start to pull that money out in your retirement tax free because it's what's called pre-tax. Okay. So these are the things that's going to get you wealthy. Josh, go.
Well, okay. So what Larry, I think, is referring to is when we did that movie tour with Thus, I talked about the fact that there's an importance to the psychology of money, and I think that the four of us guys have been up and down throughout our life, and we understand the importance of the psychology of investing and what you need to see to keep yourself connected, motivated. And what I've said in the past is you need to have two accounts. You need to have one that is just a buy and hold, an ETF, SPY, VOO, something along those lines, NASDAQ, where you are simply buying, and you're buying heavier when things get ugly, and you're buying heavy when they tell you it's the end of the stock market and we've gone from COVID to the swine flu. It's all coming. That's the account that you're just going to consistently buy in. And that one is going to be 90. And this is not professional financial advice. Consult with a financial advisor. This is the type of thing that I've communicated to my kids and my daughter's husbands, right? That one, you want 90% in there and you don't want to touch it. And I've got kids. I had a conversation the other day and they said, hey, thinking of selling all my crypto. Is it a good time? We need to pay off some debt, right? And, you need to have an account in life that's a savings account or an investment account where you don't touch it. I mean, it doesn't matter what's happening. And I understand need arises. That's where you got to get the hustle out. So you got this account. Psychologically, you're just watching it grow. It's a testimony to you. In the same way that Larry gave you an overview of what the S&P 500 did, that's cool and it's extremely important. But imagine if you had that, your own version of that. You're like, yeah, I bought in 2020 on that dip. I bought in 2007 on that dip. And it's been, every time I pop open that account, I see that it's going up and up and up. So 90% there. Then have a swing account. I've said it before. The whole process of Wall Street is learn, test, execute. You all know that you flipped them and you executed, then you learned something that you didn't want to know, and then you went back to actually learning what you needed to know. So go ahead and have a trade account. Put $1,000 in it, and then use my 4 disciplines to gauge whether it's going right or wrong. And out of that $1,000, break it up into 10 plays.
Yes.
Maybe options. Don't try to do one play. You got 10 chances to get it right. Each one, look at the disciplines and ask yourself, why did this succeed? Why did this fail? Right? And you can't graduate or scale into that trade account until you've proven that you can grow it. So you don't add money there. You can go to your all the way out of your 1,000, and then you can start again and put another 1,000 in there. This, if you separate the two and you have some self-accountability, then you're gonna find success in the course of time. But it is a journey. I didn't get here overnight. These guys didn't get here overnight. Larry and Mo were talking about trading 20, 30 years ago. And that's why we're here talking to you guys today, because it's been a journey for us. It'll be a journey for you. Get into that long term. It's fine to do some speculative plays. I can tell you, just like Keenan said, Jimmy, I got $9 grand to invest. I had this conversation with 3 different people in the last week. I said, middle-class people just buy more expensive lottery tickets.
Come on.
Working class people, they go to, wherever you buy a lottery ticket. I've actually never purchased one. They go to 7-Eleven or the gas station. They buy a $2 to $5 lottery ticket. Okay. Then you got people who can afford a little bit more money. They got $10K. They go to Wall Street. They buy GME. They buy Jimmy. They buy AMC. And it's still just a glorified lottery ticket. It's not an investment strategy. That's all I got. Keenan, I'm tagging you, bro.
All right. That was good, Josh. That was really good. Larry, I sent you a text. I don't know if you will be able to pull that up. If not, I just go off it. It's fine. So, all right, guys, check this out. What Larry asked me earlier was how we went to Chicago, me, him, Josh, and we were talking about in front of everybody. And we're telling them how to become a good trader. And Josh led us to a really, really good point right now. You got to have multiple accounts. You heard us say this many times, but I'm just going to kind of list off the ones that I have. And I'm going to start in any order, right? No particular order. Some of them are big. Some of them are small. There's this app called M1 Finance. I had started it. and I had got in on that, and you could allocate like a pie. You could pick like 25%, 25%, and any money you send over there, it'll divvy it up depending on the percentages that you chose. When I tell you I didn't open that account for years, I look back and it's double, right? Okay, that's one. That was just like a long-term account. Then I got another one on Fidelity. Fidelity is where I go. I'm talking heavy, really, really heavy. But it's my retirement account, so I keep it high majority of it VOO or VTI. And if you're a really good tech stock, I mean, really, really good, like Apple or Microsoft, okay, Amazon, you can get in there, but not that much. Long term, I'm not getting out of that till retirement. Nvidia just recently graduated to my Fidelity account. But you know what? I also have Robinhood, right? This is where my medium term account. I'll put things in the Robinhood and they could graduate eventually and I'll start buying it in Fidelity, but I got it categorized in my brain. Now, the next thing is I got my trading accounts. This is Moomoo and Webull. If I'm talking about a super hot, spicy kind of a trade, then I'm very likely doing it on Moomoo because they have the options trailing stop loss. And I need that if I'm getting really hot in the kitchen. But Webull, any kind of normal trade, I'll do it over there. But notice I have these things sectioned off. And one reason is you don't want all your eggs in one basket. If you have all of your eggs in one basket, what you're going to do is you are going to end up dipping in your long-term money, selling out of your Apple, selling out of your VOO, and going and buying Jimmy. No, we're not doing that, right? We're not doing that. So now, Larry, could you pull that back up? So I want to teach you how to start from zero and become a great long-term investor, but more so even a trader. So step number one, this is the steps to make real money trading. Number one, you got to start here. Remember, new traders start at number 4 and lose big. They start 4. We're going to start number 1. You want to learn the basics, charts, levels, and I could even add in, learn the fundamentals. How is this company making money? That's all fundamentals really mean. How are they making money? And are they getting to keep it? Right? Do they get to keep it? Once you got the fundamentals down, and I'm talking about simple support, resistance, what a candlestick is. Okay, yeah, if this thing breaks under this level, it's likely to crash. If it shoots up that, right, you got it, charts. Once you got that down, you go to no risk practice. Just start putting things on your watch list. Start to paper trade. You don't want to use your real money. You say, you know what? I'm looking at the charts. I practiced. I think this is the bottom. You put it on your watch list or you buy a paper trade there and it goes up. Once you win that a few times, you now go to low risk testing, small trades. You got $1,000 and you say, okay, I'm going to get in a Jimmy call, right? And for those of you who are new, who wasn't on the live earlier, that's GM story. Rewind it. You'll see it. I'm going to get into a Jimmy call for $1,000. Whoa. Your whole portfolio is 1,000. You're going to do a YOLO GameStop call? No. You got to go to step 3, low risk trading. If I got 1,000, I'm not even putting 100 on that. I might put $10 on it, 50 if I'm feeling real good, 50 if I'm feeling real good. Once I win a few of those low risk testing, because imagine you had 1,000 and you lost $50. Yeah, you'll be all right. Imagine you had 1,000 and you lost 1,000. You can be like, dang, how do I get back? How do I get back? No. Low risk testing. And then once you win about 5 in a row or even 3 in a row and you lose 1 and you win 3 again and you lose 1, you're like, oh, I get it now. Then you start to scale up to bigger trades. You got that 1,000, you've earned 1,100 because you've been so good with your small trades. Now you say, okay, I was doing $50 trades. Now I'm going to scale up to $100 trades. You win that a few times. Okay, you lose 1. I won 3, I lost 1. You know what? I won 3 again, I lost 1. You're getting really good. You might want to scale up to 150 now. Be reasonable so you don't end up trading with your heart. Whenever you feel like you hope and you need desperately for this thing to work, you are trading with your heart and not with your chart. So rewind this video, take a screenshot of Larry just posted it. And I promise you, if you follow those steps, you'll be a better trader. And I also say this, if you're already not a good trader and someone starts today and they follow that 1, 2, 3, 4 step formula, they're going to be a better trader than you because they started the right way. But if you didn't start the right way, it's never too late to turn around and knock it out the park.
Sorry about that. I thought you already had ended it. Listen, people, someone asked, this is the last question and we're going to end this. This has been good. This is what you guys need to be wealthy, not rich, but wealthy. Brenda asked, is it too late? And Brenda, I want to help you because I'm telling you right now, Keenan, you shared it before. How much money, Keenan? How much money do you have in the S&P 500? Go ahead, just tell them, Keenan. We need to help the people. This is not braggadocious. We want to help you. Tell them. Just tell them one of your portfolios.
And one of my portfolios, and one of them,
Yep.
I'm at. It's funny, right? I had bought it at. I was buying. Long story short, it's at 150 now. 150,000. And one of my portfolios, my other one, I don't share it with everybody, so I won't.
You don't have to. But listen,
the one that I do share is 150. Just know, I'm real heavy in it.
Listen, do you think he would have that much money into the S&P 500 if he is scared of it? No, I'm going to show you something, and I'm going to tell you how to get into the S&P 500 right now. So I want to ask you this, okay? This is the S&P 500, right? You show me 1 5-year period where you wouldn't make money. Show me 1 7-year period where you wasn't making money. Just show it to me. Show me anywhere, right? It doesn't exist. Listen, look at the max. Just show me. Look at this. If you would have started at the turn of the century, if you would have started in S&P at the turn of the century, without even thinking about it, you'd be up 270%. Without thinking about it, with no gamble, knowing that it's going to continue to go what? Up and up and up. I'm going to tell you in closing, this is what wealthy people have, good people. Doing these plays, you guys saw me make $250,000 with crypto and Shiba Inu and all of that stuff. Guess where my winnings go? Into the S&P 500, stuff I can sleep on, okay? I'm going to tell you guys, I don't have many. You guys see me on the street, don't rob me. I ain't got no money. But I tell you one thing, I ain't got no money. I got a few dollars in my pocket, but you ain't
don't
getting
believe
me. But I will tell you, and this is, listen, with all of my heart and soul, I'm telling you, I believe with my heart and soul, this is why God put me on this earth to tell you. I have over $1 million in stocks. Okay. I didn't go to a school. We're not that smart. We ain't that smart. I flunked math, good people. I was driving Uber as a side hustle in 2018. Not 2008, 2018. I'm from the dirt. Okay? I'm telling you, this stuff works. It was established 16 years after the United States was established. So if you knock the ball out of the park with an option, don't trade the next day. That's my rule. If you guys saw me, if I make, there have been some trades. One trade I made $42,000 on an option. What did I do the next day? Nothing. I ran. I didn't even look. I didn't even cut CNBC on. I just stayed away. You know why? Leave me a coffee cup if you've won big and the very next trade you've given it all back. I don't want you guys to make that mistake. Take it from us. Collectively, we've probably lost $1 million over the years in lessons, but we've made tens and hundreds times that back. So we've already learned at our expense. Hey, I'm going to leave it right there. Anybody wants to say anything else?
One last thing.
Yes, please, Josh.
That $1 million, we spent it. I always say I don't have the Harvard education. I got the harder education, and I've definitely paid for it in time with that $1 million you're talking about. I just wanted to throw an idea out to some. First of all, I made the comment about the long-term investing in ETFs. But let's just say for a minute that we're at a top or a local top. I think 5,600 on the S&P 500 as measured by the SPX. It may or may not be a local top. We've been running up pretty good. I think a lot of this year's success has been priced in. But let me just drop this thought, guys. You can put your money right now into, let's say, the Moomoo exchange. There's a link on Larry's page for that. Yes. And you could just put in whatever you can afford a week, $25 a week, $100 a week, and they're going to give you 5% interest. So there's no losing, 5.1. They're going to give that to you. And then if the market does have a pullback, you could begin to initiate your fractional share buying of an ETF. So I wanted to give you this idea like, well, I think we might be going down soon. Then commit to that amount of money going into an exchange platform you're going to get 5.1% with Moomoo, right? And then you can wait for the big red days and then the fear mongering of the pundits on CNBC. And then you go, okay, I'm going to start doing $10 a day buy, $20 a day buy, $30 a day. The entire time you're accumulating cash, then you made 5.1%. You didn't lose anything.
All right. Mo, I'm going to say this and you got the last word. Listen, I didn't answer the question about the S&P. For every $100 you want to put in the S&P, put $25 of that in there now. Start tomorrow. Now. We've been talking about the floor is going to fall for 2 years now. 3 years now. The recession's coming. Recession. 3 years of gains. The S&P just keeps going up. So here's what I want you to do. I still want you to put the $100 in, right? But I only want you to put 25 of that 100 in the S&P. I want you to keep the remainder in cash. Why? You saw that dip in 2020? That happens every 10 years. Something happens. When that dip happens, I want you to go shopping. And while everyone else is running, if you want to kill it in the stock market, while everyone else is running from the stock market, I want you to go in. Now, I don't want you to go in all in the first dip. If the S&P drops by 25 and 30%, I want you to split your money up. That other $75 out of the $25, split it up into 3 parts. It dips 15, 20%, put another 25 in. And then it goes down again, put another 25 in. Then it goes down again, put another 25 in, and then continue to DCA. And you will win, period. You can't lose with this. It has the longest track history ever. Mo, I am done. Hey, we appreciate you guys. We love you guys. Mo, I want you to have the last word. And before Mo says this, I want you to know this. If it wasn't for me calling Keenan Grace, we would not be here. So if it wasn't for Keenan Grace, we wouldn't be doing this together because I called Keenan Grace and that's how this thing started, right? If it wasn't for Mo, we wouldn't have a Patreon because Mo was the one that pulled the Patreon together. And if it wasn't for Josh, we wouldn't be as balanced as we are. So I'm saying this, if you guys see anybody that's taking these little cheap shots at us, we need you guys to help us to stay focused so we can continue to make you good money. Mo, it's on you. Say goodbye and end the broadcast.
Yep, I just want to my little last piece of advice for everyone. I'm just going to throw this up there. Remember, everybody's talking about investing in the S&P 500. This is VOO over the last 5 years, real quick, 87% up. Folks, pay attention to history, learn from history so you don't make mistakes. This is the Qs, 5 years, double of what you'll get in the S&P 500. So as everyone, all these financial advisors keep telling you to invest in the S&P 500, I'm going to ask you to consider the Qs in tech, because you're going to make more if we stay in this bullish run, which Larry has showed you we're gonna. And if you believe in AI, the Qs is where it's at, not VOO. Now, it's not financial advice, but I'm investing in the Qs. And the Qs is where you're going to make even more money. All right, family, we love having you here. This is a great community. If you're not a part of the Discord, come on over. The Stock Squad is ready to rock and roll. Tons of new content in there, tons of new channels. We are here to journey to that financial freedom together, and it takes a village sometimes, and we definitely got a great village over there.
Love you guys. Peace. For real though. Peace.